UK markets opened up since their Friday close on news that the People's Bank of China announced today that it will give commercial lenders a cash injunction. The FTSE 100 index was 0.27% higher in early trade. Of course, the mid-cap FTSE 250 also opened up 0.21%. But let's get a sense of what the intraday numbers are looking like from my colleague in London, Juliana Olayinka. It's good to see you, Juliana. Now tell us, are the market numbers still sunny side this intraday, and what are the major drivers?
Good afternoon, Bissy. Well, yes, the numbers are still very much in the positive territory. The US and Canada, their markets are closed today for a national holiday. So most of the sentiment has been picked up from Asia and COVID-19, as it's been christened, the new coronavirus name. But at intraday, the all share is up 0.17%. The FTSE 100 is up by 0.25%, and the 250 is up by 0.10%. Packaging giant DS Smith, they're one of their biggest fallers, as their chief exec said he's leaving for the betting firm William Hill. In currencies, pound not doing so great. It's down on the dollar by 0.14%, also down on the euro by 0.28%, and just down on the Japanese yen at intraday by 0.06%.
Now, Bavagutu Shetty, who's the chief executive of NMC Health, which is a company that runs private hospitals in Highgate and the Middle East, has resigned. NMC, of course, became a target of the short seller Muddy Waters in mid-December, which questioned the group's finances in a research report. Can you freshen up this report for us and what's happening to the stock at the moment?
Well, the stock at the moment is really falling. At the moment, in early trading, NMC Health, which is the UAE's biggest private healthcare company, their shares were down by about 3%. But since Muddy Waters have been looking into just how they do their accounting, their shares have fallen 70%. Dubious shareholdings. That's what a lot of the big analysts and finance companies are calling it. And they're basically looking into how NMC Health have been doing their accounting and who have been holding their shares. So last night, what has been reported is that the billionaire chairman, B.R. Shetty, he resigned with immediate effect. And also their CFO, their chief financial officer, is also out. And that's really added a little bit more scandal to the already scandal-plagued company, because a lot of the financial regulators want to know exactly what B.R. Shetty was doing with his shares. Apparently, they owned the most of these shares, and they're a little bit. There's some questions just over whether or not it was legal. So that NMC Health is also rattling the FTSE All Share today, because, of course, they're listed on the FTSE 100. So this story, Bissy, appears to just be picking up pace. A lot of the scandal and more salacious headlines will be coming out later in the week.
Of course, we have our eyes on that story and we'll see how it develops, just as you mentioned. But the British Retail Consortium today launched a report warning British shoppers to brace for a rise in food and less choice. If the government fails to come up with a plan for regulatory checks at ports with the European Union. Of course, that report also outlines the retail industry's priorities for the upcoming government negotiations with the EU. But what more can you tell us about this report?
Well, I suppose in short, Bissy, higher tariffs and extensive checks at the border is going to have a knock-on effect on UK consumers, on the retail industry. And what the British Retail Consortium is saying is that it will have a major impact on the UK economy as a whole. We've got a couple of weeks until Prime Minister Boris Johnson sits down with the chief EU negotiator and the rest of the EU 27 to try and flesh out this free trade deal over the next 11 months. And the British Retail Consortium are worried, they're panicked, because at the moment about 80% of all UK imports that we see on our shelves in the supermarket are exported from the EU. EU. And we know that we're not going to be in the customs union. And at the moment, we're not sure if we're going to have a free trade deal. And they're worried that if there's going to be extensive regulation and queues and checks on the port, then this is going to majorly affect just how much the prices are. Also, as well, lots of fresh fruit, vegetables that come in from the EU, if they're piling up at the border because lorry drivers have to fill out information, they're just saying that they're just not going to be able to get them on the shelves. So they've written quite an extensive letter to the government urging them to make sure that they put all of these provisions in place. And about 10,000 lorries every day pass through the EU into the UK. So it's a pretty extensive job, and they're worried. And I suspect, Bissy, over the next couple of weeks, especially after the trade talks kick off on the 6th of March, their voices will get a lot louder.
We hope so. Many thanks, Juliana, for this update, and we'll speak again tomorrow.
Thank you.
In Asia, the Pacific markets traded mixed today as investors continue to assess the potential economic fallout from the pneumonia-like coronavirus that has infected more than 70,000 people and killed over 1,700. Chinese shares on the mainland rose. The Shanghai Composite was up 2.28%, and the Shenzhen Composite was up 3.18%. In Hong Kong, the Hang Seng Index rose 0.58% in late afternoon trade. Elsewhere, Japanese shares fell, with the benchmark Nikkei 225 down 0.69%, and the Topix Index shed 0.89%. In Australia, the ASX 200 closed fractionally lower at 7,125.1 as the heavily weighted financial sub-index declined 0.44%. And in the U.S., stock index futures were slightly higher this morning. Earlier on, we saw the Dow futures up 14%, while futures on the S&P and Nasdaq were both higher by 0.25% and 0.43% each. Away from those markets now to Zimbabwe, where the January inflation rate fell sharply to 2.23% month-on-month from 16.55% the previous month, and that was due to small increases in the price of food and non-alcoholic drinks. Statistics agency SIMSAT says the Southern African nation, which is experiencing its worst economic crisis in a decade, will resume publishing year-on-year inflation data in March after suspending it last year.